Did you know that 65% of Americans believe they need at least $100,000 to start investing in the stock market? Spoiler alert, that's a myth. Welcome to Unveiling the Truth About Stock Market Myths, where we'll separate fact from fiction in the world of investing. Hey there, investors and curious minds. I'm Luke Baldwin, and today we're diving deep into the murky waters of stock market myths. These widespread misconceptions aren't just harmless beliefs. They can seriously impact your financial decisions and potentially cost you thousands in missed opportunities. Whether you're a seasoned investor or just starting to dip your toes into the market, chances are you've encountered some of these myths. They're everywhere, from well-meaning advice from friends and family to flashy headlines in financial media. Today, we're going to bust these myths wide open and arm you with the truth you need to make informed investment decisions. So why are these myths so dangerous? Well, imagine trying to navigate through a dense fog using an outdated, inaccurate map. That's essentially what you're doing when you base your investment decisions on these myths. These misconceptions create unnecessary fear, leading many potential investors to stay on the sidelines. They can cause others to make rash decisions based on false information. And perhaps most insidiously, they can prevent people from taking advantage of one of the most powerful wealth-building tools available to the average person, the stock market. But don't worry, by the end of this video, you'll have a clear, factual understanding of how the stock market really works. You'll be equipped to spot these myths in the wild and make decisions based on truth, not fear or misinformation. Myth 1. You need a lot of money to start investing. Let's start with the myth we teased in the opening. You need a lot of money to start investing. This is absolutely false. Thanks to fractional shares and low-cost index funds, you can start investing with as little as $1 in some cases. Many brokers now offer commission-free trading and no account minimums. So whether you have $10 or $10,000, you can start building your portfolio today. Myth 2. The stock market is just like gambling. Next up, investing in stocks is just like gambling. While there's always some level of risk involved in investing, equating it to gambling is a gross oversimplification. When you gamble, the odds are typically stacked against you, and you're playing a zero-sum game. In contrast, when you invest in the stock market, you're buying a piece of a real business that produces goods or services and generates revenue. Over the long term, the stock market has consistently trended upward, reflecting the overall growth of the economy. While past performance doesn't guarantee future results, history shows that patient, diversified investors are more likely to see positive returns over time. Myth 3. You need to time the market perfectly to be successful. Here's a dangerous myth that trips up many investors. You need to time the market perfectly to be successful. This belief often leads to excessive trading and poor long-term performance. The truth is, even professional money managers struggle to consistently time the market. Instead of trying to predict short-term market movements, a more reliable strategy is to invest regularly over time, regardless of market conditions. This approach, known as dollar-cost averaging, helps smooth out the impact of market volatility. Remember, it's not about timing the market, but time in the market that often leads to success. Myth 4. Past performance guarantees future results. Our final myth for today. Past performance guarantees future results. This is a classic misconception that can lead investors astray. While historical data can provide valuable insights, it's crucial to understand that the stock market is influenced by countless factors, many of which are unpredictable. Economic conditions change, companies evolve, and new technologies disrupt industries. Instead of solely relying on past performance, successful investors consider a range of factors, including a company's financial health, competitive position, and growth prospects. They also diversify their portfolios to manage risk. Now, let's unveil perhaps the most shocking myth of all. The stock market is rigged against small investors. This belief has gained traction in recent years, especially after high-profile events like the GameStop short squeeze. But here's the truth. While there are certainly bad actors in any system, the stock market itself is not rigged against small investors. In fact, small investors today have more opportunities than ever before. With access to free information, low-cost index funds, and trading platforms with minimal fees, individual investors can build diversified portfolios that rival those of professionals. The real advantage that small investors have is time. Without the pressure of quarterly performance reports, individual investors can take a long-term approach, riding out short-term volatility and benefiting from compound growth over decades. As we've seen today, many common beliefs about the stock market simply don't hold up to scrutiny. Let's recap the myths we've busted. 1. You don't need a lot of money to start investing. 2. Investing is not the same as gambling. 3. You don't need to time the market perfectly to be successful. 4. Past performance doesn't guarantee future results. 5. The stock market is not rigged against small investors. By understanding these truths, you're now better equipped to make informed investment decisions. Remember, successful investing is about patience, discipline, and continuous learning. It's not about getting rich quick or outsmarting the market, but about participating in the long-term growth of the economy. Now, I want to hear from you. Have you encountered any of these myths before? Maybe you've got some other stock market myths you'd like debunked. Drop them in the comments below, and let's keep this conversation going. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more investing insights. And don't forget to check out our related video on building a diversified portfolio. I'll link it in the description below. Thanks for watching, and remember, when it comes to investing, knowledge truly is power. Happy investing, everyone!